Today we're diving deep into one of the most talked about coins in the market, KASPA, or KASPA for short. Despite a dramatic 70% price drop, recent developments suggest that KASPA might be setting up for a breakout. So, buckle up as we explore technical charts, recent news, and what this means for the future of KASPA. And before we jump in, a quick reminder. This video is for informational purposes only and not financial advice. Let's set the stage. KASPA has been on a roller coaster ride over the past few months. Since hitting its all-time high in June 2024, the coin has faced significant downward pressure. The momentum took a hit after a failed rally that created a lower high in December, and since then, the downward movement has accelerated. We saw a drastic decline, culminating in a new yearly low on March 12th at around $0.0055. That's over a 70% drop from its previous high of $0.207. However, in true crypto fashion, every dip comes with its silver linings. This week, KASPA received some exciting news that turned the narrative around. CoinMarketCap has officially added KASPA to its Made in America category. This endorsement not only boosted KASPA's profile, making it the biggest gainer in the crypto market recently, but also sparked speculation that KASPA might eventually be included in the Strategic Crypto Reserve. This could have far-reaching implications, potentially adding a layer of legitimacy and increased institutional interest to the coin. So, with this backdrop of dramatic declines and positive news, the big question remains: is KASPA on the verge of a breakout, or are we looking at a prolonged bearish phase? Let's dig into the charts to find out. Alright, let's break down the technical analysis. First, we have the weekly timeframe chart, a bird's-eye view of the overall trend. Back in early February, the KASPA price broke down from a crucial horizontal support level at around $0.102. This support had been a stronghold for an impressive 455 days before the breakdown occurred. When a level that has held for that long finally gives way, it's a red flag indicating that the bullish trend might have ended, paving the way for a bearish reversal. Following that breakdown, we observed the support level flipping to resistance, a classic sign in technical analysis that the old support is now acting as a barrier to any potential upward move. As we saw on March 12th, KASPA hit a yearly low of $0.0055. Now, while this might seem devastating at first glance, it's also important to identify where the next support areas might be. Our analysis points to a cluster between $0.0045 and $0.0050, supported by both horizontal and Fibonacci support levels. Furthermore, our technical indicators on this weekly chart are painting a bearish picture. The Relative Strength Index, RSI, is languishing below the 50 mark, and the Moving Average Convergence/Divergence, MACD, is positioned below zero. Both these indicators suggest that the long-term momentum remains negative, at least for now. So, the weekly outlook is clear. In the long run, the bearish trend remains intact, and we should expect KASPA to test these lower support levels sooner rather than later. But what about the short-term outlook? Let's switch over to the daily chart to get a more granular perspective. Switching gears, let's take a look at the daily chart. Here's where things get interesting. On the daily time frame, KASPA is trading inside what we call a descending wedge. Now, for those who are new to chart patterns, a descending wedge is typically a bullish pattern. It signals that the price might be nearing a decisive turnaround point. Essentially, while the longer-term view is bearish, the short-term dynamics are hinting at a potential bounce. One of the most compelling aspects here is that the price is approaching the end of this wedge pattern, which often serves as a precursor to a breakout. Additionally, our technical indicators on the daily chart are offering a hint of optimism. The MACD, a reliable indicator for spotting bullish reversals, has shown a bullish divergence. This means that while the price is dropping, the MACD is climbing, suggesting that momentum might be building for an upward move. Unfortunately, the RSI hasn't yet confirmed this optimism, as it remains a bit lagging. So, if we combine these observations, here's what we have. The daily chart is hinting at the possibility of a breakout. If such a breakout occurs, our immediate resistance level is projected to be around $0.105, a level that interestingly aligns with the long-term horizontal resistance identified on the weekly chart. This convergence of technical signals from both the weekly and daily perspectives gives us a nuanced picture, albeit a slightly mixed one. Now, let's dive a bit deeper into some more advanced technical analysis, the wave count and divergence indicators. Our analysis suggests that within the descending wedge, the price action has completed a 5-wave decline. For those familiar with Elliott wave theory, a 5-wave pattern is typical and often indicates that the current correction might be part of a larger ABC corrective structure. In our case, this correction has been in play since KASPA's all-time high. While the 5-wave count inside the wedge is a promising sign for a breakout, there's a bit of nuance here. The ratio between waves A and C hasn't perfectly aligned with the typical common ratio observed in many corrective patterns. This discrepancy introduces a level of uncertainty. It raises the question of whether we're looking at the classic 5-wave structure or if there might be an alternative pattern forming. Nonetheless, when we balance the bearish signals from the weekly chart with the more optimistic signals from the daily chart, the overall outlook seems to lean towards a potential breakout in the near term. Our combined analysis indicates that we could see the KASPA price surge towards the $0.105 mark. However, this might only be a temporary relief rally, with the long-term bearish trend suggesting that new lows, potentially around the $0.0045 to $0.0050 support region, could follow once the bullish burst is exhausted. So what does all of this mean for you, the investor or trader? When we combine the insights from both the weekly and daily timeframes, we see a complex picture. On the one hand, the long-term trend is clearly bearish, evidenced by that breakdown from the solid $0.102 support and the RSI/MACD confirmations. On the other hand, the daily chart hints at a short-term bounce. The most plausible scenario, therefore, is that we might witness a relief rally. This rally would see KASPA price break out to around $0.105, offering a glimmer of hope for those who've been watching this coin closely. However, this bullish burst could be short-lived. Given the persistent bearish signals on the longer-term charts, it's likely that after the rally, the price will resume its downward journey towards the established support levels in the $0.0045 to $0.0050 range. This kind of pattern is not uncommon in the crypto space, where short-term volatility often masks underlying long-term trends. It's a classic case of a coin experiencing temporary relief before continuing on its longer-term path. Whether you're a day trader looking for quick gains or a long-term investor, this dual scenario requires a balanced approach and careful risk management. Before we wrap up, let's touch on the crucial aspect of risk management. In the crypto world, volatility is the norm, not the exception. KASPA's recent journey is a perfect example of how quickly sentiment can change. Whether you're planning to capitalize on a potential breakout or waiting it out for long-term gains, always remember that crypto investments carry inherent risks. Make sure to set clear stop-loss orders, diversify your portfolio, and only invest what you're willing to lose. Technical analysis, as detailed as it may be, is just one tool in your arsenal. Combine it with fundamental research, stay updated on news developments, and always have a clear exit strategy. And if you're new to these kinds of analyses, consider starting with smaller positions until you build up your confidence and understanding of the market dynamics. Now, a quick but very important disclaimer. The information provided in this video is for educational and informational purposes only and does not constitute financial advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The crypto market is highly volatile and unpredictable, and it's crucial to invest responsibly. If you found this analysis helpful, please give this video a thumbs up, share it with your friends, and don't forget to subscribe to Zaki Crypto and hit that notification bell so you never miss a beat. Thanks for tuning in, everyone. I'm Zaki, and I'll see you in the next update where we continue to explore the ever-evolving world of cryptocurrency. Stay curious, stay informed, and as always, keep your eyes on the charts. Until next time, happy trading.